Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting a technical update from Bob, also known as BDC, over at the KE Report. Some of you that frequent our website and check out the comments in the blog will often see BDC commenting on the markets, whether it's nat gas or gold or different ETFs, and he often has accompanying charts. And I thought I'd bring him on the show again for a technical update. We're going to look at a couple different markets here today and even some individual stocks. But Bob, let's kick things off with gold. You've got the chart of gold up here on this video call. And what are your key takeaways as far as how you're looking at these different levels that you have outlined on this gold chart?
Okay, this takeoff here, this topping over here, I had to go way back to 2015, 2016, and that's where my cursor is right now. And that is the beginning right there. Now, normally what they call a Chapman wave uses peaks, A, B, C, D, E, F, but I'm using consolidation zones here. I'm finding just by this chart here, as a matter of fact, that it's very useful. This is zone A, zone B, possibly zone C, but I'm going to say this is zone C here. These two here are zone D, zone E, zone F, and the peak, the current peak. And by the way, the current price of gold spot is at the top there where it says C. It's 28.96, and like that. Now, do you have any other questions, Shad?
Well, if you are looking at a Chapman wave where normally you use peaks, why was your
Right.
decision to use consolidation zones on this chart? Just the way it was behaving?
Well, it's the first time I thought of it, and if you look at it that way, it's very logical. And instead of peaks, sometimes the peaks are very difficult to define because they're close. But if you look consolidation zones and it continues north, uh, it's kind of easy to see. And one last thing I will say, a common thing in charting when you get near the top is what they call three drives to the top. And here we go. We've got this peak here, or this zone here, and this one here just above it. But we've got one, two, three. That's why I believe that overnight last night we did peak in gold for the current time. And this, I will just briefly say that this is a 382, 38.2, which normally is for a very powerful move, is a strong place to have support. If it bounces off that, it's very strong.
And that 382 is a Fibonacci number for those not familiar with it. We're not going to get into that in detail in this call, but Fibonacci numbers are often used in charting because they're the mathematics of the universe. They're how nature unfolds, and they're also how charting patterns unfold. So they're very useful numbers. Now, Bob, when you say you think it's possibly coming near a top here in this gold move, you have another chart of the live gold chart, and
Right.
you'd mentioned to me yesterday when we chatted that it could be one of these turnaround Tuesdays. I'd love you to go up to that live gold chart and just kind of zoom in on the daily action there.
Right. Here we go. Now, this is gold, and this is on a 1 day. So this would be overnight, last night. There's 1600. That's 4 in the afternoon. And you can see what happened. After the markets closed, and even the post markets closed, it ran up, interestingly, when it was very little volume. And then, boom, there's your first short. These are either hedge funds or market makers or who knows who, bam, shorted. And then it came up. It did a little what they call, this is called a bear flag, a bit of a bear flag. And then down, 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 down through today, this morning, and to now. And what I believe is going to happen now, it's going to retest this, and we will be down significantly. I don't think this is going to be a long ways down, but it'll be farther down than you're seeing right here. So if I were to put it on a 1 week, you can get an idea. Yeah, what now? Here's a consolidation zone around 2860. Let me get this out of there. You can see that. And on the monthly, okay, you can see further consolidation zones. and one of those will give critical support. But we don't know which one yet. We don't know how far back how far down it's going to go. There are ways to pinpoint it, but not for this discussion. Now, I think right now I should go to silver, if that's okay.
Absolutely.
Uh,
Let's check out the silver chart because it's got a lot different chart than gold does, but I'd be curious to get your technical thoughts on it.
right. I'll just bring it up here real quick so you can see it on a 1 month basis there. But this is longer term here. Now, silver here, this layout, this pattern is what's known as a Gartley pattern. It's not perfect, but it's good enough for government work. You've got this down here up to here, which creates this box formation. And then there's this, there could be a few smaller ones in between there, but there's a basic A, B, C, D. There's a little bit more, but let's just keep it simple. But it bottomed here. Now, as you see, this over here says 7.786. That is the top or bottom last Fibonacci ratio, which is useful. It's a real important one. This one didn't make it all the way. Because it didn't make it all the way and probably won't, although I'm going to mention a little more in just a second, it probably won't make it through this and definitely not to here to break the box. This is called a bullish Gartley wave, a bullish Gartley pattern. Now
Is
over
that because
here,
it didn't pull back, Bob, all the way down to that support? Because it stayed
no,
above that, it's more bullish, or
it
how? Why is that called that?
well, it's bullish. It didn't make it there, but I don't show it here. But the 61.8% is here. So it's gone beyond the previous Fibonacci level. So anytime you do that, the next one is the critical one. So if it doesn't make it, that means it's powerful. That means it's more powerful than having to go down and test this Fibo down here, this 78.6. But it's still, I still consider this a Gartley. It's just a stronger Gartley. Now, because we're turning now, this is today's action. This is today's candle. And because we're turning now, this is going to pull back almost certainly. It could go all the way back now and test this. I don't think so. I think it's going to go back someplace in here. So let me, if you think it's okay, Shad, let me show what a Gartley pattern looks like technically on a teaching tool, if that's okay.
I think that would be helpful for people watching in just to know what the Gartley
Okay,
pattern looks like.
right. Now this is the bullish Gartley. Now this is going to be way too simplified, but here's your bullish Gartley. The long, then down here, and we didn't break the 78.6. The other is not as pretty as this. And the bearish is just the opposite. But ignore the other percentages here. The percentage in Gartley that's incredibly important is the 78.6%. Okay, now that I've said that, and people can go back and look at that. Now let me go back to the silver chart, and we're going to show URNM, which is the uranium. And I'm going to forward this twice. Now, here we have, what is it? It's another bullish Gartley so far. And it's the same thing that you just saw. The thing that defines the box up all the way, and then A, B, C, D, and all kinds of action here. Now, this, if the uranium people were to look at this, they'd say, "Oh, that looks ugly." This is a very powerful chart, and I'll tell you why. As long as this is maintained, and it doesn't break down here, and I would get a little worried if it got more than halfway down here, but usually that's the way I look at it. If it maintains halfway or above, that's good enough. But this, you can just barely see, that is what I call a contractor or a wedge. But that doesn't even matter. The thing that's more important, if these were all the same height and they were like sticks, that's called railroad tracks in charting. That's incredibly powerful. All the pent up energy is here. And this, if I were to guess, I would say the first thing to go is this gap, and then everything after. This is a very powerful chart, but it sure doesn't look like it, does it?
Well, Bob, when you look at it, it is hugging that 0.786 support zone there. Even the last two, kind of that W-shaped bottom came down and tagged it, then tagged it again, and now it's consolidated on either side of it. So your idea would be the reason it's more bullish is that eventually it's going to have the power to break up, fill that gap, and then blast higher. Is that the way you're looking at it?
Exactly. Well, it doesn't have enough strength to break the 786 zone, the line there. It doesn't have enough strength to break the box. The box is the critical thing that must hold. And this is a very positive, bullish Gartley, I think. Another oddity, I did the ABCD on this. Just up here you can see 53.48, then you got 44.10, 49.82. People can check me if they want. 40.44. If you look at the exact one calculated by the computer when you lay this out, it's 40.46. I think that's really interesting. But be that as it may, it's I think this is a very powerful chart, and I think the people that are pro uranium should kind of maybe be a little happier tonight.
Well, that's an encouraging thought, Bob. As I am a person that's invested in uranium stock, so I'm hoping that we do see that resolution to the upside. Let's look at another chart that's always volatile, and I know it's a chart you follow a lot, and that's natural gas. Natural gas, the widowmaker, always a fun chart to look at, always volatile. Give us your thoughts on the natural gas chart you got there.
Okay, this is a website that gives free real-time uh, numbers for nat gas. This one I've got set up on an hourly, and this is today. We're looking at real-time stuff right here. I don't know what. Yeah, well, you can't quite see it, but this is real. Now, one thing I want to show you on this chart, I'll back up a little bit and show you how complex it was before. But when it bottomed here in later January, right there. Now, I have this already calculated, but I'm going to show you what it is. Now, this is an A, this is a B, this is the C, and I have this calculated to go to 3.5, let me see here, 3.573. My calculation was 3.573, and this one actually hit I got to get it right on it. There we go. 3.575, and I don't use the fourth digit there. So incredibly accurate. And one last thing I'll say about this. Now, just an aside, to play this one, I use ETFs, KOLD and BOIL. They're derivatives, but it's on a different chart. I don't want to get too complex. But I do use another basis, another ETF, but this is what you use to trade with. And the final thing I'll leave you with here is imagine this line here. You don't even have to show it. You can see there are two or three lines that are pretty close to connecting, and the same thing here, and they're constricting a little bit. This is what's known as a rising wedge. Very bearish, except until you get to the top. It's bullish, and then we're at the top now. My guess is that it will come back down to about a 38.2 here, and if it's very powerful, it'll stay there and move north. Or it'll come down to about 50%, which is right around here, and that's a kind of a normal thing to do. A more extreme down move would be down to here, which is 61.8%, and you can see how it matches this old high up here, so that's a possibility too. But any of those, that's for future. We don't know how far, we don't know how strong this is at the moment, and we don't know how far back it's going to come. Or, let's face it, this could extend farther here. It hasn't really come back a lot yet. So, but you have to, if I had this, if I had purchased the long down here, I would definitely be out here.
All right.
Definitely.
So you're seeing the consolidating wedge, the ascending wedge, and that's usually going to resolve to a bearish level. You don't know to which of those levels yet, if it's the 0.38, the 50, or the 0.61, but it's going to have maybe a little bit more room to run, but then a corrective move, and then you'll assess which support level holds to start your next charting. Is that right?
Right. Yeah. Well, yeah. And you'll be able to tell. And you can see as it was rising, you can see that there are break points, there are stop points, etc. You get used to it after a while, but also there are technical things that I don't want to get into, obviously, other internal FIBOs and things like that. But yeah, it will show itself. It will show itself. More times than not, this will pull back. So, but like I say, we don't know the future. It could continue up, but
Okay.
I'd be out.
Well, let's take a trip
Okay.
over to your site, the Fibonacci site, where people can follow your daily posts, and you have some charts up there for us to take a look at. And so, for those that don't know, Bob does have his own website, and he often will post it on our site. And so, I thought it'd be a good chance just to show people your site,
Okay. Now you mean this right here,
or the
right?
one next to it, maybe. Yeah. Oh yeah, yeah, yeah.
Well,
The one
this,
you're
yeah,
right.
this actually, yeah, that actually is the representation of the Gartley. Okay. This one is a company I use because it's very clear what's happening here. And this is pretty current. This goes back to October. And here's the Gartley used in the former Gartley, excuse me, the Chapman wave used in the formal Chapman wave method. A, you can see this up here, A, up and back, A, up and back, B, up and back, C. You can't see it, but it's slightly higher here, and it does make a difference. Up and back, D, up and back, E, interestingly, but doesn't matter. And this is the final, F. And as I mentioned before, F is very often in a strongly trending market, a termination point. Now, this chart goes until last Friday, the 7th. So it doesn't include yesterday, the 10th, or today, but it doesn't matter. I've already checked this. It didn't supersede this. So it did reflect gold also. It sort of reflected the same kind of thing. It's probably going to pull back, in other words. Now, I'll point out just one thing here, which is kind of cool. This is what I call the Trump breakout. And I truly believe that's why this thing popped. This is the election day here when Trump obviously won. And if you were to take this all as one and say that's A, that's B, that's C, and that's D, my point is that a normal Chapman wave will usually at least go to the D level. So I just wanted to point that out. I think it's worthwhile.
Well, and I'll point out that the Trump breakout had a lot to do with Northern Dynasty on the fact that I think, as a lot of people listening may know, they've been waiting to get their permits for a long time. I think over a dozen years, maybe 14 years. And there's some enthusiasm with Northern Dynasty, as well as other companies like Trilogy Metals, that if there's less regulation constraints, less red tape, that this may be good for the Pebble project. So that probably represents that gap up on that Trump breakout, is that there's enthusiasm that Trump won, that maybe in Alaska, the Pebble project will get its permit. Kind of interesting to see the fundamentals married with the technicals.
Mm-hmm.
And one other
Okay.
thing that I think you do a great job of, Bob, and you post these often on our site, is your saturation table. And so at first glance, it's a lot different than people are used to. It took me a while to make sense of what are all these numbers, Bob? What do they mean? But the idea here is to look for a strongly trending turn, either a turn to the upside or a turn at the bottom, based on how these numbers grow or shrink, and then these different color coded areas. So, walk us through in a general sense, without getting too detailed, how you use
Right.
these saturation tables.
Okay. Real quickly, I've got it down at the bottom, and people can see that later. Numbers show saturation level per 7 factors analyzed for maximum saturation. And each of those factors have to be fully saturated, which means it's sort of like integer arithmetic. You either make it or you don't. There's no in between. So if you see a number there, it has that many of the 7. This one has 4 out of the 7. This one has 3. And if they follow like this, that means this day is automatically higher than this day. The high of this day is higher than this, etc. This we're not quite sure, but probably is. And the top two I put in angle brackets just because they're very important. And one general thing is, well, let me just show you what's happening right now. This is gold and gold related PMs in general. And I have this dark gray, and I think eventually within a day or two, I'm going to turn it into this color here with white font, which means that's a turn. And suppose you have some kind of a portfolio of PMs, precious metals, gold stocks, that kind of thing. If you have some laggards, when you see this, you might say, hey, I'm going to keep my eyes on this. Or if you have some laggard that's really bad, you might get rid of it at this point. This might be good enough for you to say, hey, that might turn, even if it's close, I'm going to get rid of that laggard. Once it goes blue like this, that's the turn. That's a guaranteed turn. And so we're gonna start going down. If that turns blue, we're heading down, maybe into the FOMC minutes when some other data comes out. Who knows? But we're heading south. And I actually think that's what's going to happen, but I ain't putting that up there till I'm 100% sure. Occasionally I'm wrong even on that, but I'm human. So we've got that. Any other further explanation do you think I should give at this time, Shad?
Well, down at the bottom, you have some of those red columns. So what does that mean on, looking back at other months?
Right.
What happened
Right.
there on that red column?
Okay, here we are in November. This was a very powerful bottom. You can see here are the angle brackets, 6, 6, 7, 6. That's a bottom. That's an absolute bottom of the PMs, golds, etc. That's November 14th. If you go look at your charts, you're going to see that's the case. And then at the next, here's a top interim. Interestingly, our problem child, GDXJ, no, he didn't show one. There's probably one that was real close, but I'm a stickler. If it doesn't take them all, I don't even give you one. But that's why I do 4. That's why I like to have 4 here. And then again, here we have a bottom. That's a top. And then again, here on the 30th, we had another bottom. And then we had the full month of January. There was some activity in here, but I whited it all out because the only thing I'm interested in are the edges. As it says up above, saturation, but what it really is, trend quality, edges. I let other people, they can have the middle ground. I just want to know when to sell and when to buy.
Well, and Bob, at the very bottom of this, you have a way to jump over and show people what is saturation. I think that'd be helpful to explain these numbers. If you can click
Yes,
on that.
let me go there right now. There we go. And this might be okay. It went away. Now, what I'm showing here, one thing to make a real point here, those are not quantitative numbers. They are qualitative. It's a quality of your trend. The trend can be a gentle slope, but if it's at the 7 level, it's a very strong trend, even though it's a gentle slope. Or it could be a 45 degree. But either way, it's the quality of the trend rather than any kind of a quantity aspect. Now, what I'm showing here, it's an oddity. When things are calm and smooth, you tend to get these lower numbers because it's harder to break through. So they don't max out because they're just not powerful enough to do a full 1, for example, a full. I don't want to go into it, but it's very possible, and you go sometimes without any, and 2, 3, and then as you get up here, this is when it's very, very it's like an escalator. It's like an escalator type. You've seen those charts. People who've seen charts, occasionally you see those charts which are almost like an escalator without any profit taking, without any what they call I don't know, not a stop run, but the other side. But there's no big perturbation. It's just like an escalator. Well, that's when you get the 5, 6, and 7. The other time when it happens, this is an oddity, is when it's super stormy and choppy. The same thing happens. It never has a chance to complete one of these factors of the 7. There are 7 intraday factors, including the full day. And but sometimes it's just so stormy and choppy, you might get 1 or 2, but you just can't do any others. But what you really want, the best trend that you could hope for, is a real nice escalator going up, and then near the top it just breaks, or it breaks enough for you to let you know that you're at or near a top, and then you can take matters in hand accordingly. So that's what it's about. It's not the best explanation. I'm still working on the trend quality explanation, but this just lets you know the 2 times when you won't see many numbers that are possible. Usually you're going to get numbers 3, 4, and when you get 5, and particularly 6 and 7, then you've got a high quality trend. That's the thing. It's a high quality trend.
Okay. So going back to your saturation table, you can see on there that when you think it's a strong move, when it's got 6 or 7 of the qualities, that's why you put the 6s and the 7s in brackets. And then some
Exactly.
of those other turns or tops, like the top above it in blue, it only got to the 2s and 3s. So it wasn't maybe as strong of a move, but yet it was a turn nonetheless. So you
Well,
basically can see the intensity of the move, or how strong the move is, by how high the numbers are or how
it's
low the numbers
it's
are.
it's the quality of the trend. It's the quality of the trend. It could have been a very big in quantity. It could have been a very big move, but the quality is lower because it's flopping around a lot, or at least significantly, so that you don't have a chance to get that nice escalator effect. What this really means is that you don't have as much confidence on how much to invest, bet, whatever, however you want to look at it. You have a lot of confidence down here. When you see this, and I've made it, made it a red, that is absolutely, without doubt, a bottom. There is, you're not, there's not going to be any ifs, ands, or buts about it. That's why I like this high quality trend, top or bottom, because really what you're dealing with in trend quality is confidence. If your confidence level is high, you can back up the truck, literally.
And that's because
And
it's tripped 6 or 7 of the triggers of the indicators you're looking at.
yeah, well, yeah, that too. But you could have some 5s in here and things, but this is extremely uh, full of confidence. I think that's the way to look at it. It gives you confidence. However you got here, it might even be a spike low, or it might be a rounding bottom. However you got here, this is a powerful bottom. You can back up the truck.
Okay. Well, that just gives people some color, literally some red and blue colors and gray colors on how you look at your saturation table. So when you post that on the KER, maybe that helps people follow along. And you can also follow along with Bob at his site at Fibonomics. And it was great having you on the show, Bob, to give you an update on a couple different markets here. We crammed a lot in with gold, silver, the uranium stocks, nat gas, and even Northern Dynasty as an example of a good Chapman wave. We talked about Gartley's and Chapman, so a lot of technical thoughts here for people to consider, and we'll look forward to doing these again down the road. Maybe if people have some specific stocks or sectors they'd like to see us cover, send them in to me at shad@kereport.com, and Bob and I can cover those in a future episode. Bob, thanks a lot for showing up on the KE Report.
And thank you for having me, Shad. Really appreciate it.